It gives me great pleasure to bring Ms. H.K. Joshi, Chairman and Managing Director of Shipping Corporation of India, to understand what is her outlook on shipping rates, global economic recovery, which way the disinvestment process is moving, what is the preparedness of SCI in terms of going through a process of strategic stake. Ms. Joshi, good morning. Thank you for joining us. A year ago, it appeared that the world was collapsing. Crude prices had fallen, the demand from China had plummeted. But if I look at the basic indicators of demand and supply, which in a sense are captured by the Baltic index, looks like happy days are back.
Thank you very much for having me here. Well, yes, the happy days seems to be coming back, and the sun really seems to be shining upon us. As we all know that after an estimated contraction of about 3.5% in the global GDP, now it is forecasted to increase by about 5.5% in 2021 as forecasted by IMF. And for me, the bright spot is India, which is supposed to be the fastest growing $1 trillion economy at 11.5% in 2021. While the bright spots are showing, we need to be cautious about the fact that the entire recovery process for economic growth is going to be contingent upon how the spread of the disease really gets contained, what is going to be the rollout of the vaccination program, as well as what are going to be the economic policy choices of the countries going forward. While we see an uptick taking place, there is a lot of voice even at the country level, so where a lot of fiscal and financial policy actions are being taken for government spending, which should help global recovery and economic recovery. And in this context, I would like to quote where the US President Joe Biden is pushing for another $1.9 trillion in pandemic relief measures. Such stimulus is from US, which is the world's biggest importer, is expected to recoup all the 2020 losses, and the Euro region, the UK, and even Japan aren't expected to reach their pre-COVID GDP levels until 2022. And when we are talking about the Baltics index, you know, that's primarily driven by China. And there is a concern that the global recovery is becoming unbalanced because of that. Because the growing current account surpluses in China, which are estimated at around 1.5% of GDP, as against deficits in the US at around 3.5% of the GDP, may lead to trade tensions as have been seen recently between US and China. And there is also fear that the global recovery gap, it will probably increase the gap between the world's poorest nations. And measures like debt forgiveness plans may be warranted to support the low-income countries. So that was on the global front.
One is excited to know that what is SCI's preparedness for a strategic sale. It's going to be a complicated process. It's a process which involves a lot of paperwork and also valuation of some of your land assets. How prepared are you, and where has the process internally reached?
I think we are absolutely prepared and geared for the strategic sale and the disinvestment of the government 63.75% stake along with management control. We have already, as it's already in the public domain, we are hiring a consultant to help us with the demerger process, and there would be certain part of the balance sheet which is going to get demerged, and the rest of the assets which are going to be primarily our core assets are going to be going ahead for the disinvestment. And the preliminary information memorandum, which has already been issued and to which a response has already been received by the government is primarily for the core assets of the company. As far as Shipping Corporation is concerned, we are fully geared for the entire disinvestment process. There are no hang-ups and hold-ups from our side whatsoever.
That my immediate follow-up question perhaps is a leaf from your answer, which is that you already have appointed a merchant banker, or in this case a valuer. When do you expect that the total value of Shipping Corporation split into two parts, the core business, which is the shipping business, and the non-core business, which is non-core and land and other businesses, will be made open? I will be open to public.
See, on this, I will not be in a position to make a clear-cut statement, primarily because of the fact that the disinvestment process is being driven by the Government of India, DIPAM in particular, and the valuer that you are quoting in this context is Messrs. Protocol, and they have been hired by DIPAM for the entire valuation process. So the valuation is being driven by DIPAM and not by the management. I hope I could answer your question.
Let's talk about the core business. Yes, thank you very much. You've been very open and you've been very frank, so really appreciate that, because markets are watching this interview and investors would be looking at a deeper understanding from you. Now let's look at the core business, ma'am, something which you essentially understand and something which is under your control. Disinvestment process is something which the ministry and the DIPAM, in a sense, they are driving. Now, my understanding of the shipping businesses, there are two types of rates: open market rates and long-term contracts. Given that we've seen a lot of volatility in shipping rates in last 1 year, how much of your long-term contracts have been renegotiated, and as percentage of your total contracts, how much is on spot, how much is in long-term?
See, considering that we are a listed company, as well as considering the fact that we are under disinvestment, I'll not like to share any details which are not in the public domain. And I hope all our investors and the viewers appreciate that fact. But the fact remains, you are very right. We very carefully balance the market risk, and we have a proportion of certain business which we do on spot basis, trying to capture the market upswings when they emerge. And we also have a mix of time charter to give stability to our business. So we have a very balanced basket of both time charter and voyage. And that is very evident from the fact that last year in April, May 2020, when there was a completely unprecedented upswing in the tanker market, SCI could capture that volatility in the market and give value to its shareholders.
So what is the kind of growth potential now going forward of the next 3 to 5 years? If we take a look at the outlook, the kind of challenges to growth perhaps, how they can be overcome, and what you're anticipating?
See, frankly speaking, from 2008 onwards, the industry has been under depression, and that really hasn't reversed as of now. And after the pandemic, I think there is going to be a lot of upsurge. There are going to be a lot of opportunities, and this is actually the time for the maritime industry to grow, even though the symptoms right now don't appear to be conducive. But in preparedness, there is a lot of opportunity. And Shipping Corporation of India is already in the market for tonnage acquisition. And these are tenders which are already in the public domain. So I do not hesitate in sharing that we have already opened the technical bids, and we are in the process of technical evaluation of the physical inspection of the vessels which we have got. And we've got a fairly good response to the tender for the tonnage acquisition. So regardless of the disinvestment process, the company is going very strong with respect to its growth programs going forward. I would also like to share with you that in the midst of the height of the pandemic, the company had gone in for a direct service to Maldives, which was one of the first direct services. We have also very recently, just about a month back, we have forayed into inland waterways, and we consider that we are going to get the fast mover advantage in this sector, even though this sector currently doesn't look to be very good. But this is going to be the future of India. And through our inland and coastal shipping company, which is based out of Calcutta, we have already started a regular service on the National Waterways 1. And we are running 2 vessels of inland and waterways on this sector. So this is just to demonstrate the fact that the initiatives the management is taking for the growth and diversification of the company. We would also going forward be looking at certain strategic restructuring, as well as we have done something already, and we are looking at doing something more. And we are also seeing of how we should be looking at the mix of our current tonnage. So we are constantly working on that. Disinvestment or no disinvestment, for the management, it makes no difference.
Okay, fair enough. That gives us a good idea of the strategy going forward as well. You touched upon, of course, the Baltic rates, but just to get a sense of whether you see higher rates also sustainable going forward, and in terms of your own financials as well, the debt to equity ratio incredibly low at this point, even if that you feel is sustainable at these levels.
You're absolutely right. There has been a continuous improvement in the debt equity ratio over the recent years, and I recall the extreme amount of stress that I underwent when I joined the company in February 2015, when the DSCR levels were not being met by the company. Cash flows were quite erratic, and I went through a lot of stress. But today we've nursed the company back to good financial health. And I think the fundamentals and the financials of the company are very strong. The company is currently not sufficiently leveraged, which gives us the distinct advantage of going in for more tonnage acquisition, which I was just talking to you about. We had to ensure that we were healthy enough to attract debt at the right prices, and we've been doing that. The company has substantially refinanced its existing ECBs, which have made it even more healthy. And I consider that the current debt equity ratio should not be a cause of concern. It gives us the scope for further leveraging and for further tonnage acquisition, which was the intent. So we are very much on track. This was by deliberate design, and we are on track on it.
What is the definition of the non-core assets you have? We know you have parcel of lands which are surplus, but what is the other non-core businesses or assets which you have, which if the strategic sale goes through, could be divested?
See, I have a certain limitation even in this, because as you would know, the preliminary information memorandum, which was put out by Deepam, has not listed the non-core assets. And to the queries to the bidders, it was clearly stated that the details of the non-core assets will be made known to them in phase 2 of the bidding process. So I cannot exactly list out what the non-core assets are, but I am very sure that the market is smart enough and everybody knows all the details. So I would request if I can be excused from listing out those, because it will not be in the fitness of things for me to list that at this juncture.
Would you like to drop a hint as to how the debt equity split would move? Because for the existing shareholders who are buying Shipping Corporation stock today, which is listed in the market, you are getting the shipping business and the non-core assets. Soon the company could be split. So what happens to the debt? The operating company gets the debt, the holding company gets the debt. How will it move?
See, logically speaking, again, this is part of the second process, but I'm sure every investor is very smart. And I would like to assure all the investors and the viewers that the debt which currently sits on the balance sheet of the company is primarily for the tonnage. We've not been having any other type of debt. So all the debt which is there is for the tonnage and for the ongoing operations. We've not acquired any non-core asset out of the debt. I think that should be quite explicit and clear.
Yes, thank you very much. Really appreciate the fact that you're sharing a lot of information with us, whatever you can share, which is available in the public domain, and also maintaining the importance of the fact that the DIPAM is driving this entire strategic stake sale. My next question is perhaps about historical divestments which have happened. When banks have been merged within banks, when banking consolidation has happened, when consolidation of some other government companies have happened, some of these strategic stake sales or even divestment have run into issues of labor union and pension. How would you manage it? Because that is a tough one to crack.
I don't think we have too much of IR issues in the company as of now. And as you would know, we are a substantially lean company in terms of that we have about 650 odd employees onshore and about 3,000 which are our fleet personnel. And the fleet personnel is, there are no IR issues relating to that. And I absolutely don't consider there is a IR matter at all relating to this company. I consider this is going to be a very smooth transition. And I don't envisage much of a problem on that count.
Is there an advantage Shipping Corporation of India gets for business? Yes, please go ahead.
I said, except if the investor would want to further make the company further lean, there could be issues with respect to the golden handshake, which I think every investor will be prepared for it.
Of course. Okay. Is there some government business which is coming by the nomination route because you are a government company? We have seen that in some government companies that government business comes to them by nomination or the fact that they are owned by government. And that could change if the divestment process, if the strategic stake sale goes through?
See, I'd like to handle that question two ways. One is that, yes, nominations do happen, but nominations never happen for anybody who is substandard. So the first part is that if we are getting nominations, we are getting nominations because of our ability to service those contracts. So I think there is an inherent potential, capability, capacity within the company to be able to service those contracts, because of which these contracts come to us. So when the management is getting, management control is going and the disinvestment is also taking place, in no way the capability or the capacity or the inherent skill sets are getting eroded in the company. So I think the investors have to have confidence in the capability of the company to be able to continue servicing whatever government contracts we currently have. And we don't get these out of any concession. We are winning these contracts simply because I consider we are the best in the industry. That's my confidence level. And you would also know that we very recently done a all women officers sailing, which is again demonstrative of the ability and the capacity building which is there in the company. So these are all demonstrative things, symptoms and signals which the investors should be picking on. And we are demonstrating the capability of a very strong shipping company.
Well, SCI over the years has really made India proud. I mean, the whole idea that when the Indian flag is there on a, Indian flag is there in the chartered ships and all, it's an amazing feeling. I've been covering SCI for years now, so I can share out of personal experience that it's such a fabulous organization. It makes all of us feel very proud. My last question, ma'am, is Shipping Corporation of India has always followed a liberal dividend policy. You have a cash on your balance sheet. Is there a consideration that before the divestment process, some fat dividends are coming?
Again, asking me a question which you, as a responsible news channel, would know that being a listed company, I cannot say anything on the dividend front until and unless the board has approved, recommended it, and it gets recommended in the AGM of the company. You know the rules which restrict me to say anything. But again, I will say everybody is intelligent enough to understand what's going to happen.
Well, Ms. Joshi, really appreciate your time. Good luck and thank you for joining us.
Thank you so much. Thank you to my viewers. Thank you.